There's this kind of mentality that people were buying just above 20,000. So for it to flush below, psychologically, a lot of them will jump out and get scared, and then price usually recovers. So in the very near term, I'm in the camp that we still have a little bit more upside to go. So I could see us bouncing back to 25.5 or so, maybe even 28. But I want to caveat that with saying that this is still a bear market. There's this kind of mentality that people were buying just above 20,000. So for it to flush below, psychologically, a lot of them will jump out and get scared, and then price usually recovers. So in the very near term, I'm in the camp that we still have a little bit more upside to go. So I could see us bouncing back to 25.5 or so, maybe even 28. But I want to caveat that with saying that this is still a bear market. This is still an ice age, like you referred to it as. The charts are still pointing to overall further downside. You're right about a lot of the issues that are occurring. The Celsius news, the Terra Luna collapse, all of those are very much like the dot-com bubble bursting in 2000. And I think that's what crypto is going through right now. And if there's one thing I remember from that period, it was the very, very start of my career, is that it didn't end with just a few blowups, right? You have to see more. You have to get more downside there. You have to get to a point where investors are ready to totally throw their hands up in despair. And while a lot of investors are still, they're hurting, the average investor, I think, is in from $50,000, $60,000. They're not fully ready to give up just yet. And I know that sounds horrible, but that's how market bottoms are put in going on here. So I do have a target that remains right around 12,000. So I fine-tuned it a little bit. The 12,000 level gives us a measured move. So if you take a look here, and this is kind of just some cool technical analysis, if you take this move down right here, right? So from this high down, which was a straight shot, then you had this kind of consolidation pattern. And then if you take this high down here, the measured move, meaning this distance to this distance, that's the exact distance from here to where the bottom should be put in. In addition, Bitcoin during its winters, its past bear markets, corrects 80 to 85%. If you correct that in this period, you get 12,000-ish, give or take, as well. So there's a lot of confluence of levels at around 12,000 where my next target is. When we were below 20,000, you
Yeah.
saw so much bear market kind of sentiment, and the markets tend to wait and kind of lure people back in. So even in this mid area here, when we were back to these highs of 47, 48,000, I was hearing, oh, we're going right back to all-time highs. This is the big breakout. This is all that stuff. And the markets still need to kind of do that here, in my opinion, in which case they have to move up. You have to start getting that sentiment, that hope back. And the markets are evil like that. And not literally evil, but they like to get people to start to believe again, and then they crush their dreams.
Oh,
And that's just the way markets work. Much as I am a believer that there's a decent chance of going to 12,000, maybe even lower, right? I don't know for sure. There's also a chance it doesn't get there. So what I have done here is I basically selected, and I said to myself, how much money am I willing to invest in Bitcoin in this bear market when it gets down to this area or below? I took that amount, let's just say $1 million,
right.
right? And I divide it into 6 categories, 6 even amounts. And when we were at 19,000, I took my first 1/6 and I bought Bitcoin there. And what I'm going to do is every $2,500 to $3,000 down, I'm going to buy another 1/6 position, eventually accumulating a full 6/6 position, right? And so the idea is
Yeah.
I've been around the block enough where I understand that sometimes downside targets don't fully get achieved and sometimes they overshoot. So I don't try to pick the exact bottom. Once we get near, I just start slowly dollar cost averaging in, knowing that my long-term view on Bitcoin is still extremely, extremely bullish. 65K will be a low target for when this thing takes off in the next cycle. Just use your logic, right? Logic is the most powerful thing in investing, but so many people get caught up in emotion instead to make their decisions. But if you think about how eventually we're going to slide back into a big recession, the Fed eventually is going to have to print more money. Central banks have already printed tons of money. There's a general need from a people's perspective all over the globe for this alternate to fiat currencies that cannot be printed willy-nilly. I mean, all of these factors make us need some sort of digital currency. Now you could say, well, gold could fill that role. I agree it does, but try, sending gold over countries, right? I mean, you can't pick up a bag of gold and just walk to the airplane and carry it easily. The key to crypto is how easily it can be transferred from country to country, how quickly, and how, again, it doesn't have that endless printing ability like fiat currencies. So I'm in the camp that this is now the beginning of the end of the drop. Yes, it's going to get uglier. Yes, it's going to get harder for a lot of investors, but I do think below 20,000 gets us very close to that bottom, maybe around 12, maybe sub 12. But in the scheme of things, when you're talking about a move from 65,000 down, we're kind of at the tail end, right? We've already come down 40, 45, 50,000. Now we just have to do maybe another 10 or 5.